We begin this hour with breaking news. In line with expert expectations, Canada's inflation rate rose last month to 3.3%. The rise comes after the inflation rate tumbled to 2.8% in June. The jump today mainly attributed to the impact of gasoline prices and the growing costs of mortgages. And while the price of groceries remains high, it grew at a slower pace in July, rising by 8.5%. That's compared to 9.1% in June. BNN Bloomberg's Paul Bagnell is standing by with more for us. Paul, good morning to you. Break down the report for us.
Well, you've done very well so far, Marcia. That's all correct. There are two ways to look at inflation. Obviously, one is the headline rate, and you've summarized that for viewers. Headline inflation rising by 3.3% in July versus July of 2022. That's a stronger advance than had been expected, mainly due to gasoline prices, and we'll get to that in just a moment. The other way to look at inflation, and it is the Bank of Canada's preferred way, is core inflation, which strips out notoriously volatile items in the consumer price index basket like food and energy, i.e. gasoline prices. That measure of core inflation rose by 3.7% from a year earlier, but significantly tracked downward from June's reading. And that's the direction that the Bank of Canada wants to see core inflation moving. Also, the 3-month average on core inflation, also a preferred measure by the Bank of Canada, is now averaging 3.5%, and that is good news as well. That's a lower three-month average. The Bank of Canada obviously wants to see headline inflation at 2.0%, so we're still a long ways from there. The most recent forecast we had from the bank as to when headline inflation might hit 2.0% was mid-2025. And just a final word on gasoline prices. The so-called base effect is important in all this. That's where were prices a year ago. And in early 2022, there was a very steep decline in gasoline prices. That decline is over now, so gasoline prices are not as changed from a year ago as they were. They haven't come down as much from a year ago as they were coming down in prior months of 2023, and that change is one reason for the uptick in headline inflation.
So, Paul, what's your takeaway? I'm listening to you sort of counterbalance each statement. I'm just wondering, should we feel good about this report today? Does it signal there's going to be another rate hike in the future? What are we left with when looking at these numbers?
Well, I think Canadians should feel good about it. I mean, a year ago, or a little more than a year ago, in June of 2022, headline inflation was 8%, and now we're at 3.3. So the pace of inflation has been more or less cut in half over the past year. Moreover, economists believe that next month, on September the 6th, when the Bank of Canada comes to Canadians with its latest policy announcement, that the bank will not raise interest rates. In other words, the decline in inflation is giving the Bank of Canada room again to pause, observe, and perhaps not raise rates again. There will be another meeting in late October, and it's possible the bank may use that opportunity to increase rates again. But we are certainly near the very end of this long and painful rate increasing cycle, because inflation has come down markedly from the peak when it was really at semi-crisis levels. 8% is a very, very high level of inflation. Nobody wanted to see that persist.
Paul, thank you so much for all of that. We'll check in with you throughout the morning. Appreciate you starting us off with our breaking news. Thanks.